And that's where we begin this business bulletin, looking at the economic consequences of the coronavirus outbreak, already having an impact on some companies' earnings. Our business editor, Stephen Carroll, joining us to tell us more. Stephen.
Well, this is a big knock coming from the world's most valuable technology company. Apple now says that as a result of the coronavirus outbreak, it won't make as much money as it had expected in the first 3 months of this year. In a statement, the iPhone maker says that while work is starting to resume in China, the company is experiencing a slower return to normal conditions than it had anticipated. As a result, the company says they don't expect to meet the revenue guidance they provided for the March quarter, guidance that came from just 3 weeks ago. In that forecast, Apple had already given itself a wide range for what it expected to earn in the first 3 months of the year, between $63 and $67 billion. In this update, the company didn't give any new figures, saying that it would wait now until April to assess the fuller impact. Now, Apple has two problems here. One is that supplies of iPhones will be, quote, restrained because of the extended shutdown in its Chinese factories. The other, a drop in sales in China, one of the company's major markets. The firm not giving any indication of when it expected conditions to return to normal. Moving on, the bank HSBC is to cut 35,000 jobs over the next 3 years. That's after it reported that 2019 profits had slumped by a third to $13.3 billion. That's mainly due to a major write-off related to its European business. HSBC's interim CEO warned that parts of the bank were not delivering what he called acceptable returns. Noel Quinn announcing a new $4.5 billion cost-cutting drive, which includes reducing the number of bank branches in the United States. China is granting exemptions from tariffs for almost 700 more goods that are being imported from the United States. This is the third and largest set of products to see tariffs lifted since the dispute began. Beijing and Washington signed a so-called Phase 1 trade deal last month. The products which will no longer be subject to import tariffs include pork, soybeans, and some medical equipment. Lots happening out there for the markets to chew over today. The Apple news really giving investors in Asia pause for thought. Of course, many companies are tied into the iPhone maker's supply chain. HSBC shares listed in Hong Kong down 2% after their results. Overall, the market in Hong Kong down by 1%. Falls 2 on the Nikkei in Tokyo and the Shanghai Composite and Kospi in Seoul as well. On the currency markets, euros trading for $1.08 and 83 pence sterling as well. Now, the French train maker Alstom has agreed to buy the rail division of Canada's Bombardier for up to €6.2 billion. The deal will create the world's second largest train manufacturer, as Luke Schrago now reports.
Up to €6.2 billion. That's how much Alstom is prepared to pay for Canada's Bombardier Transportation, as the French train manufacturer seeks to take on larger foreign competition.
I'm very proud to announce the acquisition of Bombardier Transportation, which is a unique opportunity to strengthen our global position on the booming mobility market. We are deeply committed to step up the turnaround of Bombardier Transportation activities and deliver significant value to all stakeholders, particularly our customers.
Parent firm Bombardier is billions in debt after investing huge sums to develop new aircraft and has been offloading its assets in a major fire sale. The funds from the transaction, a mix of cash and shares, would go to paying down the debt. Alstom, for its part, is fighting to counter competition from China's CRRC Corp, the world's largest manufacturer of rolling stock, which has been making major inroads into the sector beyond its own borders. Together, Bombardier Transportation and Alstom would have a virtual monopoly on rolling stock in France and allow the new entity to go head-to-head with CRRC. The European Union still has to give its assent, however, after it torpedoed a previous potential merger between Alstom and Germany's Siemens last year over antitrust concerns. It's thought there could be less opposition this time, though, since Alstom and Bombardier Transportation have a lower collective European market share in high-speed rail and signalling.
The world's richest man is to spend $10 billion fighting climate change. Amazon founder Jeff Bezos says he'll start giving money to scientists, activists and non-profit organisations working to protect and preserve the Earth. He's estimated to be worth around 130 billion. This coming as Amazon has faced fierce criticism both internally and externally for its carbon footprint, and it uses fossil fuels to deliver billions of items around the world. Well,
All right. Thank you very much, Stephen Carroll, with that business update.